Respected viewers, welcome. I want to start with a question, one that I think many of us will struggle to answer, but it's a question we must all face at some point. Is the AI boom we are witnessing today a once-in-lifetime opportunity, a goldmine waiting to be tapped? Or is it the early stages of another tech crash, just like we saw with the dot-com bubble? Will the promises of AI transform our world for the better, or is it all just smoke and mirrors, ready to collapse under the weight of unrealistic expectations? The truth is, nobody knows. And that is the first lesson we need to understand if we want to navigate this uncertain landscape. But in this uncertainty, there are lessons to be learned. Some of the wealthiest people in the world have made fortunes by investing in things that others were too scared to touch, while others have lost everything because they believed the hype. The question we must all ask ourselves is this: which side of the coin are we going to land on? In the world of investments, there are no guarantees. There is only risk. The question is not whether risk exists, but whether we are prepared to handle it and whether we can spot opportunity amidst the noise. AI is perhaps the most exciting, most volatile, and most unpredictable force in the world today. And it's either going to be the greatest opportunity of our lifetime or one of the most significant financial bubbles in history. But here's the thing, NAR's opportunity rarely knocks at the door in a way we expect it. It often comes disguised as uncertainty, as confusion, as risk, and it's in those moments when everyone else is scared, when the future looks uncertain, and when most people are running in the other direction, that the true investors step forward. They see what others don't. They understand that the real wealth is not in the easy, obvious choices. It's in understanding what others overlook. And in this case, that means understanding AI and its true potential. So let's begin the journey of understanding this phenomenon. Let's explore whether AI is a gold mine or simply the next big bust. To do that, we must first step back, think clearly, and evaluate the situation from all sides. AI is often heralded as the next big thing. The promise is there, from self-driving cars to healthcare breakthroughs, from finance to entertainment. But the question is, how much of this promise is actually going to materialize? And more importantly, is how much of it is just hype? The stock market is filled with buzzwords and excitement, but a critical truth remains. Just because something is new, just because it's exciting, doesn't mean it's worth investing in. In fact, some of the most disastrous investments in history came from people chasing the next big thing without understanding the fundamentals. The dot-com bubble was a perfect example. Everyone thought the internet would change everything, and it did, but only after many of those who over-invested were wiped out. In this moment, AI may appear to be the new frontier, but here's the truth: as much of what we see today is still speculative. Yes, the technology is growing at an incredible pace. Yes, it promises to change industries and transform lives. But the gap between what AI is capable of right now and what it promises to deliver in the future is wider than most people realize. And that gap is filled with uncertainty. Think about this for a moment. First, how many companies are out there right now calling themselves AI-driven, AI-powered, or AI-enabled? But if you dig just beneath the surface, you realize they're simply using the term because it's a hot buzzword. The reality is, very few companies are actually using AI in a way that fundamentally changes the game. Most are simply rebranding old technologies to ride the wave of investor enthusiasm. But let's take a moment and think about what it means to invest in something truly transformative. When you look back at history, the most successful investors didn't just follow trends. They were patient. They understood the fundamentals. They were willing to invest in things that others thought were impossible. But more than that, they were willing to reject the hypees and invest in reality. Let's look at another example: Warren Buffett. He famously avoided investing in technology stocks during the dot-com boom. Why? Because, as he said, "I don't understand the business." Buffett knew that understanding the core of a business, its long-term prospects, and its ability to generate sustainable profits was more important than jumping on the latest trend. In today's world, AI is the new trend, and it's easy to get caught up in the excitement. But before we dive headfirst into this world, we must ask ourselves, do we understand AI? Do we understand how it will evolve and impact the world? Or are we just investing in something because everyone else is? In this moment, It's important to remember that AI is not magic dust. It's not something that will solve every problem with a snap of the fingers. It's a tool, a powerful one, but a tool nonetheless. And like any tool, its effectiveness depends on how we use it. The truth is, AI investments are filled with potential, but they are also filled with risk. There will be companies that succeed and companies that fail. Some companies will disrupt entire industries, while others will fade into obscurity. And in the midst of all this, there will be investors who make fortunes, and there will be those who lose everything. But here's the thing, whether you succeed or fail in this market depends on your mindset. Are you investing with patience, with a long-term vision, or are you chasing the quick fix? The next big thing. Are you prepared to wait, to sift through the noise, to understand the fundamentals? Or are you simply going along for the ride? The market will reward those who have the vision to see beyond the hype, the patience to wait, and the wisdom to know when to invest and when to walk away. If you're in it for the short-term gains, you'll likely find yourself on the losing side of the equation. But if you're in it for the long haul, if you're willing to do the work, then AI could be one of the greatest opportunities of your lifetime. So, as we move forward, let's keep this in mind. Ours opportunity exists, but it's not handed to us on a silver platter. As it requires hard work, patience, and a willingness to understand what most people don't. If you can do that, you'll position yourself not just to survive the AI boom, but to thrive in it. Part 2 Buzz. Let's dive deeper into understanding AI and its potential. We've discussed the promise, the uncertainty, and the need for caution. But let's get practical. What are the real ways that AI can impact industries? How can we separate the gold from the fool's gold? AI is already starting to shape the way we work, live, and communicate. And as much as people try to downplay it, the AI revolution is not just around the corner. It's already here. But just because something is here doesn't mean it's ready for full-scale adoption or for investment. Like any technology, the road to meaningful and profitable AI integration is rocky, uncertain, and long. Look at healthcare, for example. There are incredible AI advancements in diagnosing diseases, personalized medicine, and drug discovery. In theory, AI can process vast amounts of data and identify patterns that humans simply can't see. It can revolutionize how we approach medicine, reducing costs and improving outcomes. This sounds incredible, but how much of it is reality, and how much is just speculation? Take the story of IBM's Watson. For years, Watson was heralded as the future of healthcare. Investors and analysts alike were sold on the idea that AI would change everything, from cancer treatment to the way hospitals operate. But the reality, Watson's grand promise never quite materialized. The system struggled to meet expectations, and many of the ventures built around it ultimately failed to deliver. That's a lesson we must learn. Just because something is backed by AI doesn't guarantee its success. In the world of finance, AI is being pitched as the solution to everything from algorithmic trading to wealth management. Robo-advisors are growing rapidly, and many believe that AI will replace human financial advisors entirely. But ask yourself, sir, what's the value in using a system that simply looks at past data? Financial markets are driven by human psychology, emotion, and unpredictable events that AI may not fully understand or anticipate. For instance, AI can process historical data and identify patterns, but it cannot predict human behavior, which is often the driving force behind market shifts. The 2008 financial crisis didn't come from data, it came from human error, greed, and the inability to predict the consequences of bad decisions. In many ways, AI's true value lies in its ability to process data more efficiently, but it can never replace the nuanced understanding and judgment that human experience provides. Now let's consider another area: self-driving cars. It's easy to get swept up in the headlines about how AI will revolutionize transportation. But look at the reality. The road to autonomous vehicles has been slow, expensive, and filled with roadblocks. Technology companies have invested billions, but we still don't have a fully functional, safe self-driving car on the road. It's a promise that's still in the future, but the path to getting there is filled with regulatory hurdles, ethical concerns, and technical challenges. The market's appetite for self-driving cars has led to inflated valuations, with companies pouring money into the space based on future potential rather than real-world progress. So, the big question remains, are these companies truly innovating, Or are they riding a speculative wave, hoping to cash in on future hype? This leads us to the critical point of differentiation. Verge investing in AI today is about recognizing the difference between true innovation and inflated promises. While there are undoubtedly some companies that are driving meaningful AI advancements, there are many others riding the coattails of excitement without delivering results. In this world, hype is often mistaken for progress. So, how do we spot the difference? How do we avoid falling into the trap of speculation like so many did during the dot-com boom? The key is fundamentals accuracy. Let's take a step back and think about the mindset of successful investors. Warren Buffett, for instance, is a man who values businesses that are easy to understand, have a strong competitive advantage, and generate sustainable cash flow. When you apply this logic to AI, you realize that AI companies should not just be evaluated on their technology, but on their ability to generate long-term, reliable profits. Look at companies that have used AI successfully to increase their efficiency, enhance their customer experience, or improve their profitability. These are the companies that have long-term staying power. But many of the so-called AI companies today are still in the experimentation phase, with little to show in terms of real-world impact. Investing in AI for the sake of being an AI is a dangerous game. As investors, we must learn to ask the hard questions. Is this company using AI to solve a real problem? Or is it merely capitalizing on the excitement around AI? Is it an innovation with a clear path to profitability? Or is it just a flashy demo with the real value hidden behind the promises? And that brings us to another point: is market timing. Yes, when the internet boom happened, it wasn't just about the technology. It was about timing. Companies that were early to the game and correctly identified real-world applications made huge fortunes. Those who jumped in late without understanding the fundamentals were burned. AI is no different. There will be winners and losers, and only those who can identify the true innovators and differentiate them from the hype will come out ahead. Timing is critical. So, while we may be excited about AI, we must also exercise patience. Don't rush in. Take the time to understand the companies, their technology, and their potential ASRAs. Now, before we go further, I'll pause here and let you think about this. Are you truly ready to take on the AI revolution, or are you simply chasing the next big thing? Now that we've reflected on the exciting potential and risks surrounding AI, let's dive deeper into the dynamics that could truly separate the winners from the losers. What makes a company stand out in the AI space? What are the factors you need to consider before you pull the trigger on an AI investment? Let's peel back the layers and perhaps uncover some hidden truths. The first thing you must realize about AI is its dependency on data. As much as people love to talk about neural networks, machine learning, and deep learning, the real heart of AI is data. And not just any data, but high-quality, relevant, and vast amounts of it. That's where many AI companies stand or fall. A company can have the most advanced AI technology, but if they don't have access to a large and accurate data set, that technology will fall flat. The effectiveness of an AI algorithm is only as good as the data it processes. It's the difference between an AI that can predict consumer preferences accurately and an AI that offers recommendations based on incomplete, biased, or outdated information. Take the example of AI in marketing. Companies like Google and Facebook have access to massive amounts of data about consumer behavior, data that allows them to target ads with impressive precision. This data gives them a competitive edge. But what about the smaller players in the AI space? Can they compete with companies that control the flow of information? When you invest in AI, ask yourself, does this company have the data it needs to drive its algorithms, or is it trying to make do with what's available? The second thing you need to consider is AI's capacity for scalability. Let's say a company has a working AI product that's capable of making some incredible breakthroughs. But can that product scale? It's easy to get caught up in the allure of a shiny new technology, but you must ask the tough questions. How easily can this AI model scale across industries? How easily can it be adapted to different markets, business models, and customer needs? Many AI companies fall short of expectations when it comes to scalability. Think about the transition from individual use cases to mass market adoption. AI is still relatively new to many industries, and its implementation can be complex. The infrastructure costs, the time it takes to integrate into existing systems, the need for skilled labor, all these factors can slow down AI's growth. This is why the best AI companies are the ones with a clear and sustainable path to scalability, AJ. But scalability isn't just about size. It's about how effectively AI can evolve over time. Consider the software space. We've seen countless companies develop powerful tools, only to have them become outdated as new technologies emerge. If AI is to truly revolutionize industries, it must not only grow, but continue to adapt and improve. In other words, is the AI company building something that can evolve, or is it creating a one-hit wonder? And then there's the question AI ethics and regulation. As AI advances, the ethical implications become more significant. Governments and regulators are beginning to pay close attention to AI's impact on privacy, bias, and job displacement. You can see the direction this is heading as regulation is coming whether we like it or not. Now let me ask you, what happens when a company faces regulatory pushback that affects their AI product? It's easy to forget that AI operates in a complex legal landscape. When you invest in AI, you're not just investing in technology, you're investing in a future that is still being defined by the law. As governments around the world introduce new rules and guidelines, some AI companies will thrive while others will be caught in the crossfire. Think about what happened to tech companies during the dot-com era. Laws were slow to catch up to the rapid advancements in technology. Many companies suffered from lawsuits, fines, or outright bans as a result. So, when you consider an AI investment, it's essential to look at the company's approach to regulation. How proactive are they about addressing ethical concerns? Are they staying ahead of regulatory challenges? Here's a company that understands the evolving regulatory landscape is a company that has a better chance of long-term survival as a. Now, let's not forget about the financial strength of the company itself. It's easy to get swept up in the excitement of investing in an AI startup, but remember, not all startups are built the same. Many AI companies require significant upfront capital to fuel their research and development. It can take years for an AI product to mature enough to generate substantial revenue. Look at the financials of the company. Do they have the capital to weather the storm? Are they relying on external funding, or do they have a solid revenue model in place? It's tempting to chase the next big thing, but you must remember that many startups run out of cash long before they ever turn a profit. Think about some of the failed dot-com companies. Many had amazing ideas and technology, but they lacked the financial resilience to survive the harsh market conditions. ESA's financial strength is a critical factor in determining the survival and eventual success of AI companies. And speaking of financial models, let's talk about profitability. In the world of AI, profitability can be an elusive goal. Many AI companies operate in a constant state of investment, always raising funds to push forward their research and development. While this is normal for many tech companies, it can lead to an unsustainable business model. Without consistent profits, a company is constantly at the mercy of investors and market conditions. Profitability is not just a sign of success, it's a lifeline. If a company cannot prove that it can generate sustainable profits from its AI technology, then investing in that company is a gamble. And gambling has no place in serious investing. You need to look for businesses that aren't just throwing technology at problems, but businesses that can make money while solving those problems. Businesses that generate value. And so this is the crux of the AI investment dilemma. It's easy to be drawn to the promise of an AI-powered future, but true investors understand that the road to success is paved with careful analysis, patience, and foresight. It's not just about betting on a buzzword. It's about betting on companies that have the vision, the financial strength, and the ability to deliver real-world results. Now that we've explored the fundamentals of what makes an AI investment worth considering, let's zoom out and look at the broader picture. It's easy to get wrapped up in the technicalities, the opportunities, and the hype. But at the end of the day, AI is just another tool, a tool that will serve the businesses that truly understand how to wield it. As AI is only as valuable as the people who are implementing it and the industries that adopt it. You see, technology alone does not create wealth. It is the application of technology in the real world that does. Let's not forget that the dot-com boom wasn't about the technology of the internet itself. It was about how the internet changed commerce, communication, and entire industries. And when the bubble burst, many businesses were left behind, not because they didn't have great ideas or products, but because they failed to adapt to the realities of the market. The same is true for AI. It's not just about investing in companies with the best AI algorithms or flashiest technology. The companies that will ultimately succeed in the AI space will be the ones that integrate AI into existing business models in ways that deliver tangible results. This brings us to an important point: the application of AI is still in its infancy. Yes, we've seen incredible advancements, but we're still in the early stages of understanding how AI can truly transform entire industries. Take healthcare, for example. We've heard about AI's potential to revolutionize diagnostics, drug development, and personalized medicine. But when you look closer, you realize that the healthcare system is a complex web of regulations, legacy systems, and entrenched interests. The road to fully implementing AI in healthcare is long, expensive, and fraught with obstacles. AI may have the potential to save lives and cut costs, but only if the companies behind it can navigate the intricacies of the healthcare ecosystem. This is where the real value lies, not in the technology itself, but in the company's ability to apply that technology to solve real-world problems. Investing in AI requires more than just a belief in the technology. It requires a belief in the company's ability to execute in a complex, dynamic environment. The same applies to other industries. Whether it's manufacturing, logistics, finance, or even entertainment, AI has the potential to disrupt, but only if it's applied thoughtfully and strategically. And this is where the greatest opportunities lie. Investors who understand the business applications of AI, rather than just its technical features, will be the ones who make money in the long term. Now, let's take a moment to talk about the AI hype machine. We're living in an era of constant news cycles, social media frenzy, and marketing blitzes. It's easy to get swept up in the excitement. After all, every week seems to bring a new AI breakthrough, a new product launch, or a new game-changing company. But we've been here before. The dot-com boom was driven by the same frenzy, a never-ending parade of disruptive technologies, all promising to change the world. But here's the catch: not every new technology is worth your time or money. The dot-com era taught us a harsh lesson. Just because something is new doesn't mean it's valuable. Many companies during the dot-com bubble were fundamentally flawed. They were based on great ideas, but they lacked the fundamentals of solid business models, strong leadership, and the ability to generate consistent profits. Our AI is not immune to this same flaws. It's easy to forget that the AI boom is still a speculative market. We're not talking about established companies with decades of steady growth. We're talking about startups and emerging players who are making bold promises, but who haven't yet proven their ability to turn those promises into reality. This is why you have to be careful with your investment choices. If you're investing in AI, ask yourself, is this company built to last? Or is it just riding the wave of a buzzword? When the inevitable correction comes, and it will come, the companies that survive will be the ones that have strong foundations, a proven business model, clear customer demand, and the ability to scale in meaningful ways. The rest will fall by the wayside, just like the dot-com companies that didn't have what it took to survive in the long term. This brings us to another crucial point: patience. Thus, in today's world of instant gratification, it's easy to think that every investment should provide immediate returns. But the reality is that successful investments take time. The companies that will thrive in the AI space are not the ones that promise overnight success, but the ones that are building slowly and steadily, carefully considering how AI can provide lasting value. Remember, Rome wasn't built in a day, and neither will the future of AI. It takes time to see how AI can be fully integrated into industries, to see which companies can execute on their visions, and to see which technologies can withstand the inevitable fluctuations in the market. As investing in AI requires a long-term mindset. If you're in it for the quick gains, you might be in for a rude awakening. This is where the true challenge lies. Can you resist the temptation to chase short-term profits? Can you be patient enough to wait for the AI companies that will stand the test of time? The answer to that question will define whether or not you come out ahead. 2. As we continue this journey into the AI investment landscape, it's essential to understand the concept of our real-world scalability. This is where many investors get lost. They look at AI with wide-eyed optimism, imagining that every breakthrough will lead to explosive profits. But as with any technology, the true value of AI is not in its theoretical possibilities, but in its ability to be implemented, scaled, and integrated into the fabric of businesses that already exist. Let me give you an example to put this into perspective. When the personal computer was first introduced, it was seen as a game changer, a revolution. And indeed it was. But it wasn't just about having computers. It was about having companies, like Microsoft and Apple, that could create software and infrastructure around that technology. They understood the practical applications of the personal computer and how it could be used to improve productivity, education, entertainment, and so much more. The same principle applies to AI. It's not enough to simply have AI technology. You need to create ecosystems around it, I guess. And not every AI company will be able to do this. Those who fail to create sustainable, scalable business models will eventually find themselves left behind. But the real opportunity lies in investing in those companies that can scale their AI applications across multiple industries. For example, look at AI's role in automation and robotics. Many companies are already using AI to improve efficiency in manufacturing, reducing waste, and improving safety. In this case, the technology is not just transformative, it's practical. It delivers tangible results that improve bottom lines. This is the kind of AI investment that will likely prove its worth over time, as opposed to speculative companies that simply promise the moon. This brings us to another key concept. Is understanding the competitive advantage. It's all well and good to invest in a company that's riding the AI wave, but what makes that company stand out from its competitors? Is there something about their technology that gives them a leg up? Or are they simply jumping on the AI bandwagon because it's the thing to do? The companies that will survive and thrive are the ones with an heirs defensible competitive advantage. But whether it's their proprietary technology, exclusive data sets, or highly skilled teams, these are the companies that have a greater chance of weathering the storms of the market. They're the ones that will turn AI into a long-term, profitable business rather than just a short-lived trend. When you're considering investments in AI, it's essential to ask yourself ours. What makes this company unique? What is their edge over the competition? If they can't answer that question, they're probably just another player in a crowded market. The real value will lie in the companies that can clearly define and defend their position. And let's talk about Blestatar for a moment. We hear all the time about how AI relies on data to improve its models and make decisions. But here's the thing, as not all data is created equal. The companies that have access to high quality, unique data will have a massive advantage in the AI space. Companies with proprietary data sets that no one else can replicate will be the ones that can use AI to create meaningful breakthroughs. They will have a monopoly on their own data, and with that comes tremendous power. However, it's important to note that raw data is a double-edged sword. Privacy concerns, ethical considerations, and government regulations around data usage are becoming increasingly important. If companies fail to navigate these challenges, they may face significant setbacks, both financially and reputationally. The companies that succeed in AI will be the ones who can use data responsibly, transparently, and ethically. So, as we step back and look at the big picture, it becomes clear AI is not a one-size-fits-all investment opportunity. It's not about buying into every new AI company that comes along. It's about understanding areas which companies are poised to make a real impact, areas, and more importantly, as why they will succeed there. It's easy to get swept up in the excitement of AI. The potential is huge, and the future seems full of limitless possibilities. But remember, as AI is a tool, not a magic bullet. Its success depends on how it's applied, by whom, and for what purpose. Siri, if you're going to invest in AI, make sure it's with a clear understanding of the underlying principles, the applications, and the competitive advantages that will determine long-term success. Now, let's pause for a moment and reflect on the question that many of you are probably asking. Is AI investment truly a goldmine, or is it just another bubble waiting to burst? The answer, as always, lies in the fundamentals. The key to successful investment is not chasing trends or riding the hype, but understanding the underlying value of a business and its ability to deliver sustainable returns. The bubble will come. It always does. But if you invest wisely with patience and discernment, you'll be ready to reap the rewards when it does. As with any investment, it's about having the courage to see through the noise, the discipline to stay focused on the long term, and the wisdom to recognize which opportunities will stand the test of time. As we reach the end of this discussion, let's reflect on the journey we've taken together. We've explored the intricacies of AI investment, understanding the fine line between the excitement of a new frontier and the reality of a speculative bubble. We've delved into the fundamental truths that can guide us through the noise, patience, discernment, and the unwavering commitment to long-term vision. Now, let's bring it all together. You see, this AI revolution is real, but so is the risk of it being overstated and overhyped. It's no different from any other technological innovation that has come before it. When the internet first emerged, many believed that the mere presence of a website or an email address would guarantee success. But we know better now, don't we? It took years of careful, deliberate growth, followed by refining business models, building ecosystems, and understanding customer needs for companies like Amazon, Google, and Facebook to rise to their rightful places. AI will follow a similar path. AI will not magically solve every problem. It won't fix broken business models, and it won't create value out of thin air. Its power lies in its application. The companies that will thrive are the ones that can build sustainable business models around AI, integrate it into existing industries, and use it to solve real-world problems. These are the companies that will survive the inevitable market corrections and come out stronger on the other side. So, how do you position yourself for success in AI investment? It begins by focusing on the fundamentals: strong business models, clear competitive advantages, ethical use of data, and a relentless commitment to long-term vision, as patience is key. In the world of AI, as in any investment, there are no shortcuts. Remember this: great investors don't chase trends, they build on fundamentals. They understand the value of compound growth, the importance of risk management, and the necessity of patience in the face of volatility. In AI, as in other markets, the temptation is to chase the quick profits, to bet on the next hot stock, to join the frenzy. But the investors who truly win are those who stick to the long-term path, who remain calm when the world is caught in the whirlwind of speculation. So, let's return to that fundamental question: is AI a goldmine or a bubble? It's both. It's a goldmine for those who understand its value, its limitations, and its potential. It's a bubble for those who get caught up in the hype, who ignore the risks, and who chase the next big thing without understanding what they're investing in. The future of AI investment will belong to those who can separate the signal from the noise, who can identify the businesses with true potential, and who can see beyond the surface-level excitement. In the end, whether AI becomes the goldmine that so many hope for, or the crash that others predict, will depend on the choices we make as investors. We have the power to shape our financial futures, but that power comes with responsibility. It's our job to educate ourselves, to make informed decisions, and to remain patient as the story of AI continues to unfold. And as you embark on your investment journey, always remember this simple, yet profound truth: our success in investing doesn't come from betting on the hottest trend. It comes from understanding what you're investing in, why you're investing in it, and having the patience to see your investments grow over time. May you find wisdom in the choices you make, and may your journey through the world of AI investment be one of growth, insight, and lasting success. Let patience be your guide, and may you always remember, the best investments are the ones that stand the test of time. Thank you for joining me on this journey. The world of AI investment is full of potential, but only for those who approach it with clarity, purpose, and patience. Until next time, take care, invest wisely, and stay focused on the long-term path.